Aloha and welcome to the Nebius Network. And yes, I know what you're thinking. Beach background, hat and sunglasses. This must be a Nebius earnings video. Well, you're right. Today we'll be looking at their Q2 earnings. Q2 was one of those quarters that reminds you why Nebius is on our radar. Revenue landed just over $100 million, more than 6 times what they did this time last year. That's not growth, that's hyper growth, guys. And the company didn't just report a great quarter, they raised their outlook for the year. Before, management was guiding for an annualized revenue run rate between $750 million and $1 billion by year end. But now, they're saying 900 million to 1.1 billion. That's a big jump, and it's them telling us they see momentum in their pipeline continuing, which is fantastic. Now let's talk about EPS, because I mentioned this in my pre-earnings video. For the quarter, they reported a loss of about 38 cents per share. Yeah, it's still a loss, but here's the key. It was better than what Wall Street expected. That means they're narrowing losses faster than the market thought, even while they're building out massive infrastructure. For a growth story like this, that's a good sign. Looking ahead, their roadmap is aggressive, and that's what I like. By the end of 2025, they expect to have about 220 megawatts of connected power, and they're targeting over 1 gigawatt by the end of 2026. In this business, power is everything. More power means more GPUs online, more workloads running, and higher utilization rates. And that's where the operating leverage kicks in. Subsidiaries like Avride and Toloka aren't just side projects. They feed more demand back into the Nebius platform. Avride's delivery fleets prove real-world AI applications of scale, and Toloka's data services increase stickiness for Nebius cloud customers. So every time those businesses grow, they make the core Nebius business stronger. Analysts are picking up on this too. Like I've said in previous videos, Goldman Sachs recently initiated coverage with a buy rating and a $68 price target, which was roughly 45% above where the stock was trading at the time. D.A. Davidson boosted their target to $65, and now BWS Financial have raised theirs from $80 to $90. That's a rare moment where retail enthusiasm and Wall Street are actually pointing in the same direction. So where does the stock go from here? If they execute on that power build, keep utilization climbing, and the guidance stays firm, I still like the path to $100 a share within the next 6 to 12 months. Pre-earnings, Nebius was trading at $54 per share, but once the Q2 earnings were released, the stock jumped to $68 in one day, and now it's run up even more to $74. Looks like FOMO is kicking in, guys. But the path to $100 won't be a straight shot. High growth names almost always give you pullbacks. If you're looking to start a position, I think the $60 to $65 range is an attractive zone on dips, if it even happens. If you already own shares, those same dips are where I'd personally consider adding, as long as the execution story stays intact. So what am I watching next? Here's what I'll be keeping my eye on. Are they connecting power on schedule and filling it quickly? Does guidance hold or move higher next quarter? And are Avride and Toloka showing measurable pull-through to the core cloud business? The bottom line is, Q2 delivered on growth, on improving profitability, and on building a clear roadmap for the next phase. We got a big guidance raise. EPS came in better than feared, and Wall Street is moving their price targets higher. As they keep stacking quarters like this, I think triple digits are inevitable. And until then, I'll be keeping an eye out for those $60 to $65 pullbacks. This is not financial advice, but just how I'm seeing it. Drop your thoughts in the comments. What's the one milestone you're watching before year end? Remember to smash that like button, click subscribe, and hit that notification bell for more Nebius Network. Thanks for watching, and I'll see you on the next one.